Hey everyone, it is Evan here from the Trade Risk on Tuesday, July 10th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right in here with the S&P 500 cash market. This is a weekly time frame. Each bar represents 1 week worth of trading. And if we zoom in on this week's action so far, you can see we are off to a nice strong start, up a little over 1% here on the week. It is only Tuesday, but so far we are getting a nice follow-through week to last week's reversal to the upside. So if we backpedal just a little bit and recap what's gone on here over the last month or so, we spent the second, third, and fourth week of June really pulling back here. 3 down weeks in a row. We lost this 2740 level. And then last week we came kind of roaring back. It was a light volume week. It was a holiday shortened week, but we did reverse and we did close above the final week of trading here in June. We took out those highs, closed above those highs, and back above 2740, putting the bulls kind of back in a authoritative position, kind of reclaiming the near-term trends. And now, as it stands this week, we have continued in that progress, and we are following that up with some further gains. Now, a couple of things to note here on the weekly chart is these bands here, this 2790 to 2800 level. So we are coming into the widely sort of watched and talked about 2800 level in the S&P 500. That is important because that is, 2790 is about where we failed just a month ago, back on the 15th here of June, and 2800 is where we failed earlier this year. So if you recall, if we go back up just a little bit further, back in January when we had that first initial impulse leg to the downside, that quick 10% or so pullback in the market, when we rebounded off of those levels, we got as high as 2800 before failing and rolling back over. And ever since that point, we've been kind of, grinding our way back up to these March highs here. So really, we've spent the entire 2018, almost the entire 2018 below 2800, aside from just a couple of brief weeks coming into the start of the year above here. So this is going to be an important level. It's going to be a level to pay attention to because it is kind of charged with a couple of past inflection points. And we really want to see if the market on this third time around can break through this resistance. And the other sort of, caveat or reminder I'll point out here is because it is a widely watched level, do expect perhaps things aren't going to be as clean as maybe you and I would like. In other words, when a lot of people are starting to pay attention to a level, sometimes the market will, even just rally beyond it, kind of overshoot the level just a little bit, maybe a rally to 2820 and then maybe a rollover or some type of reaction. And again, I'm not even saying we have to roll over. We could just cut right through it and march our way back to all-time highs. But really, I think what I'm trying to get at is don't be so precise at just looking at 2800 and the second we're above it, it's bullish, and as soon as we're below it, it's bearish. It's really this band here, and that's at least the way I like to view markets, and hopefully that'll help you out too. So that is the S&P 500 on the weekly chart. As it stands now, uptrend back intact. We're coming into resistance, but we're above all the bullishly aligned, fast rising moving averages here on the weekly chart. Now, if we go down to a daily chart, here is a similar picture, just a little more refined now. And what we notice right off the bat here is we are a bit extended in the short term. Doesn't mean we have to reverse, but we're a bit extended here in the short term, rallying into resistance. So what that tells us is, we really wouldn't be an ideal situation to be layering on aggressive long exposure right now as we're up 4 days in a row. We're extended away from some of these moving averages, and we are coming into resistance, it's probably a time to certainly stick with long, stick with the recent uptrend here, but to trail up those stops and kind of just wait and see how the market reacts at this level. Again, 2790, 2800, you see we get a little bit of a wick here at the top end of today's session, but it was a fairly muted day. It was a quiet day. Seems like the market is perhaps waiting for earnings season to really kick into gear. Maybe that is the catalyst that will ignite us through this resistance, or maybe it's the catalyst that thrusts us off of resistance and we start to roll over like we saw back in March of this year. Don't know. I'm not going to play the prediction game there. For now, I'll stick with the trend. The trend is higher, but I do want to be respective of the ground that we've already covered and the fact that we've failed at this time multiple times in the past several months. So let's pay attention to 2800. Let's pay attention to how we finish off the week. And on the downside, really, I'd say there's a lot of wiggle room here to just kind of bounce around and even move sideways and frustrate people. Again, in between, I'm still looking at 2740 as my kind of line in the sand to the downside. If we started to lose that, then I would start to get certainly a little more concerned about the market environment. But we're about 2% away from that level. So I think some chop, maybe some sideways consolidation, even let these moving averages catch up as the market starts to prep itself for earnings season right under this 2800 level. That makes sense. And perhaps though, if the market may have other intentions and it may just cut right through this, as many people doubt this market or want to fight this market. And if it does start to charge through here, we should be prepared for that as well. So those are the shorter term levels that I'm paying attention to here in the S&P 500. And it is the S&P 500 and the Dow Jones that has recently started to get a little more of a bump to the top of the pack, if you will. It was for the past several months, really the Russell 2000 really leading the market to the upside, followed by the NASDAQ 100. And then it was the S&P 500 and the Dow that had really sort of lagged the former two. And it's kind of reversed now. We're seeing at least the past week or so, the S&P 500 and the Dow start to get a nice rebound to the upside. They're starting to be the leaders in this market, if you will, as say the Russell 2000, like on a day like today, did not manage to close green. It did close 0.5% in the red, almost had a bearish engulfing bar up here, but it did manage to rally off of these lows. Again, it's not the end of the world. It's covered quite a bit of ground here. It's trading just about 0.5% off of its all-time highs, or 1% off its all-time highs here. So I don't think it's a spot to be to get aggressively pessimistic here. But if we do fail, which it looks like we're potentially failing at these prior all-time highs here, maybe it just means that the Russell 2000 needs to move sideways for a few days to maybe even a couple of weeks, and maybe the SPY and the Dow start to get a little bit of the changing of the guard and start to pull this market to the upside. We got financials that'll be reporting pretty much the front pack of earnings season. They start, I believe, Friday. So, look to see how some of those larger cap financials and Dow components start to fare as earnings season gets underway. For the Russell 2000, this level here, about 167 or so, that's the short-term kind of very tactical level that I'd be paying attention to. If we abruptly lost this, if we did it on some heavier volume range expansion to the downside here, that would get me a little more defensive, or at least cautious for this area of the market. Until then, though, the uptrend is still intact. Moving averages are rising, bullishly aligned, and prices above them. NASDAQ 100, you can see here, also now coming back into resistance, into these prior highs here at 178, just under 178. We did manage to close green today, but it was a very lethargic day, and we do have, again, resistance overhead. My line in the sand to the downside is about 174 or so. So 174 to the downside, 178 for new all-time highs. Let's see how the market reacts in the coming days. So that is the landscape overall. Bulls are still in control here, but we should be at least mindful that we have covered some ground over recent days. We do have some technical levels above us in virtually all the major averages. So let's see how they respond to those in the coming days and how we finish off the week. So that is the market environment. Let's get into some other major markets here. TLT on the week is to the downside, a little over 0.5% here. You can see we had a nice kind of 4-week rally going in the long bonds here. Last week closing the highest weekly close going all the way back to January of this year. But you can see we did get a little bit of a move off of those levels. We're still at this point challenging some of the fast moving averages. We closed right at this 8-period EMA. The shorter term uptrend is still higher, but this level 122 and change, 123, this is where some resistance is. This is where prior overhead supply is. Look at all of the overhead supply at this level back from most of 2017. In fact, all the times we found support here at 123 back here in June, August, really July, August, October, November, and then we broke down earlier this year through that level. Well, now the market's trying to get back above there, and it's facing a lot of that overhead supply. So for now, the short-term trend is higher, but it's a tough spot. It's not a spot that I'd be looking to get aggressively long here, but we'll have to see how this shakes out. I think the levels in the short term are pretty clear. Next up, let's go to gold, which did lose some ground today, but is up or slightly or basically flat here on the week. It finally did put a slightly outside, an outside reversal week last week, and it is, potentially trying to stabilize from the beating it's taken over the past couple of months, but this is still in a tough spot. Moving averages are declining, bearishly aligned, and gold right now just needs some time and needs to prove itself that it can hold in at these levels. And right now the path of least resistance is lower. It's covered a lot of ground to the downside, so some mean reversion here, not so surprising, but it's a tough spot, not one that I'd want to be, not a fight I'd like to pick at this time. If I had to pick anything, it would be silver. And silver, like I say, did break down from this multi-month sideways channel here, but it is kind of just hanging on right under this prior support level. So for me, silver is a more immediate actionable trade if and only if it can start to reclaim this 1530 level, ideally on volume, ideally with some authority, with some range expansion back above 1530. That would get me excited about a potential false breakdown in silver. But until and if that happens, you got to give credit to the sellers here and respect the downtrend, respect this broken support, and we'll see if we can reclaim this level over the coming days and weeks. Oil next, you can see did finish higher this week or today, and this week so far it is up nearly 1%. It's hanging out at these year-to-date highs here. The trend remains strong to the upside. Bulls remain dominant and in control here. Take a look at the uptick in volume here on this latest surge back to these highs. This was over the past couple of weeks. So trend remains strong. Volume pattern still looks good here. It's covered a lot of ground. I think there's a lot of people that want to fight this and look for some mean reversion. But until, at least we start breaking down below 1565 or so, it's really tough to fight this to the upside. Natural gas, on the other hand, is in fact clearly rolling over here. Not a tremendous amount of volume coming in on this move lower, but the price action has really turned to the seller's advantage now as it broke down from this choppy mess that it was in for a couple of weeks now. It was, it did break to new highs here, went sideways, had the potential to turn into a continuation pattern before moving higher again, but it did turn out to be a sort of distribution pattern. We broke down below it, and right now sellers are back in control. So for me, natural gas is in a void until we start reclaiming, say, 2350 to the upside. And that is it. That's what I have for today's midweek video. Hopefully you guys are doing well out there. Thanks so much, as always, for watching our videos every Tuesday and Friday, and do subscribe to our YouTube channel if you want to stay up to date with all of the latest that we publish. So thanks so much again, and I will talk to you later this week.